I'd like to call to order the Village of Ashwaubenon Finance and Personnel Committee for Tuesday, October 21st, 2025. Roll call, please.
Chris Zerble.
Here.
Tracy Flukie.
Here.
Kelly Service.
Here.
Tom Selk.
Here.
And Tim Jaden.
Here.
All right, please stand for a pledge of allegiance. And please keep in mind our brave men and women that are keeping us safe here and abroad. Action on the agenda.
Move to approve.
Second.
We have a motion, a motion by Kelly and a second by Tom. All in favor, say aye.
Aye.
Opposed, motion carries. Did I do that right?
Yep.
Okay.
Helpful for
Just elbow me if I forget. Action on the minutes from August 19, 2025, Finance and Personnel Committee meeting.
I'll make a motion to approve the minutes as presented.
Second.
We have a motion by Tim and a second by Kelly. All in favor, say aye.
Aye.
Opposed? Motion carries. Items for discussion and possible action. A, consider, discuss, act on employee benefits insurance broker services agreement renewal. Joel.
All right, thank you, Chris. In your packet is the updated renewal from Brown & Brown. They were formerly known as Hayes Companies. Brown & Brown bought them out a number of years ago. They are now officially Brown & Brown. They were titled Brown & Brown, formerly Hayes, and then previously just Hayes Company Incorporated. But we've been working with formerly Hayes, now Brown & Brown, for several years to provide employee benefit insurance brokerage services. The contract that is in your packet is a 3-year extension of an existing agreement that we have. The increase in fees over that 3-year period is roughly 3% to $27,053 annually. This is included in the 2026 budget as appropriate. If you're not familiar, we do offer a fully self-funded plan, but we use Brown & Brown to help administer that plan and really kind of give us strategic directives and objectives to work from so that we can provide a very beneficial and cost-effective plan to our employees. I would say from our experiences, and Greg can certainly echo these sentiments, that for $27,000, we get well above that in service from Brown & Brown. We meet with them quarterly to review our plan, our costs, our administrative processes as it relates to our health insurance. They assist in marketing and negotiating to other plan providers from stop-loss insurance and other benefits such as diversified benefit services for our flexible spending accounts, our COBRA administration, and family medical leave as well. And then they certainly provide a great deal of support from a human resources standpoint, providing education, awareness, and information to our plan participants. So if individuals on our plan have challenges identifying providers, or let's say they were denied a benefit as a result of care that was rendered, our assistance from Brown & Brown includes negotiating with providers and getting information for our plan participants. So they really act as a liaison that really eliminates the need for myself or human resources generalists from having a very sound understanding of benefits, because they can be really complicated and convoluted at times. And so we really lean heavily on Brown & Brown to provide that support and service. So again, the agreement is in your packet for consideration. This is, again, incorporated into what will eventually be our draft budget for next year, and staff is recommending committee and board approve the agreement as presented.
Joel, I just have one clarification. So the 3% increase is from last year to next year, and that will stay the same amount then for the 3 years. They won't go 3% every year.
Correct.
Okay, thank you.
I'll move to approve the Employee Benefits Insurance Services Agreement with Brown & Brown for the period October 1, 2025 to September 30, 2028 at an annual cost of $27,053.
I'll second.
All right, we have a motion by Kelly and second by Tim. All in favor, say aye.
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 Opposed, motion carries. 6B, consider, discuss, act on changes to village medical, dental, vision insurance plan for 2026. Joel.
All right, thank you, Chris. So in your packet is a cover letter just kind of introducing the topic of plan design for employee medical, dental, and vision benefits for the 2026 plan year. We are recommending a few minor changes to our plan design for 2026 with the goal of reducing the overall cost to not only the employees' overall premium increase, but also to the village as well. So what we are proposing for 2026 is a slight increase in the out-of-pocket deductible. And the increase would be $250 for individual plan participants and $500 for family plan participants. In addition to that, we are proposing, and I may not have been exactly clear on this in my cover report, but we are proposing a slight increase with the maximum out-of-pocket amount as well. So presently, for in-network individual plan participants, the out-of-pocket maximum is $6,500. We are proposing an increase of $300 to $6,800. For family plan participants, the current out-of-pocket maximum is $13,000, and we are proposing a $600 increase to $13,600. By doing that, we do anticipate the overall premium equivalent to increase 7.3%. If we make no changes to our plan design, that increase will be just over 11%. So you can see, obviously, by changing the out-of-pocket deductible and the out-of-pocket plan participant annual maximum, we are able to decrease that percentage. With that being said, we are still waiting for the negotiated stop-loss insurance. We have not received those numbers as of today. So that 11%, or if the plan design change is agreeable to committee and board, that 7.3% increase is worst-case scenario. So that it would go down in the event we are able to negotiate a better stop-loss insurance. For those that aren't familiar with what stop-loss insurance is, as I mentioned, we are a fully self-funded plan. So any expenditures that employees receive for health, medical, insurance purposes, they effectively get billed to the village. We pay that invoice directly. So we don't have a third-party insurance provider that insures the village. Now, we do have a plan administrator, and that is UMR. UMR gives us we negotiate a plan design with UMR. And so by doing that, what happens is an employee goes to the doctor sends their bill to UMR. UMR validates it to make sure that the benefits that were rendered match the plan design. If they do, then an explanation of benefits gets sent to the employee and a bill or an invoice gets sent to the village. Stop loss comes into play where we have individuals that may be what we consider high-cost claimants. So a catastrophic illness or injury occurs with an employee. We are limited in our liability to a cap. And stop-loss insurance right now is $75,000. So meaning an employee has a catastrophic injury or illness, and the cost of that is more than $75,000, then stop-loss kicks in, and basically the insurance pays the remainder of the premiums for that employee. So if you have an employee, let's say, that ends up with a cancer diagnosis that could range anywhere from $500,000 to $1 million in cost for medical treatment or surgery, the stop loss limits our exposure to that maximum threshold. The more individuals you have with that catastrophic loss, obviously is going to increase our premium cost to stop loss. And to be quite honest with you, that is in and of itself right now our largest driver in cost for premium equivalency is the stop loss insurance. The healthier we can get our employee pool and the lower high cost claimants we can have in our plan, the lower the stop loss insurance will be, the lower the risk we'll have, and the lower cost will be to the village. And so that's what's really kind of driving that. We have a few individuals on our health plan, so these aren't necessarily employees. They can be certainly spouses or family members. We do have a few people that are high-cost claimants, and that is really what's driving our efforts to negotiate a quality stop-loss insurance plan at the lowest possible price to the village. So again, that's what we're hoping for, is to kind of negotiate that price and bring that down. As I mentioned, right now, kind of worst-case scenario is about 11% increase with no plan design changes. If we make the plan design changes that are recommended, that increase would be 7.3%. If stop loss comes in better than what we currently have, that 7.3% increase will be diminished. So this information is obviously shared. We have an internal health committee made up of employees from various departments. And our goal is to make sure that they understand our self-funded program, how it's built, how it's funded, and if there is a thought process from our employees about how we can best distribute costs, not only to them but through the village, we discuss that. So we talk about a variety of things from premium sharing to deductibles to out-of-pocket maxes, and all of those things are taken into consideration as we prepare our recommendation for plan design changes. If we ultimately want to reduce the overall cost to the village and to plan participants that are not heavy plan users, the best way to do that is through out-of-pocket deductibles and out-of-pocket maximums. You can certainly increase premium equivalent sharing, but that's not going to necessarily reduce the overall cost to the employee in the village, because you gotta add the responsibility back to the plan, to the user, than you do to all the other people paying for the premium, if that makes sense. So the more burden, I shouldn't say burden, but the more share you can have for those that use the plan, that ultimately reduces the overall cost burden to the rest of the employee pool and to the village. So that's why we're recommending the changes to the out-of-pocket deductible and to the out-of-pocket maximum. So with that, I'll answer any questions that you have.
I'm glad you, go ahead.
Go ahead, Chris.
I'm just glad you explained, I was gonna ask if the employees were involved in the process along the way. But you explained it pretty well. I'm glad to hear that, that it just doesn't get presented and all of a sudden they're going, what? Right, yeah, that's okay. So when this gets proposed to us, you got a feeling that it's okay with the employees are accepting or understand what's happening?
I certainly, when you take into consideration the dichotomy of interest, right? So I'm sure the village and the board would want to have zero increase to its overall cost for health insurance, and the employees want 0% increase to their cost for health and plan design. We try to find that balance of what's going to be the most productive and most fruitful for both entities, right? The employee, we want to make sure that we remain very competitive with our benefit and plan design, so our employees recognize that they're being taken care of, but also recognizing that there is a financial burden that the village bears, and we have to minimize that burden so as that we can make it affordable for the village to provide those benefits to the employees. Sure. So certainly there's going to be employees that will say, well, I'd rather have a higher premium share and a lower deductible. And then there will be other employees that will say, no, I'm really not a heavy plan user, so I'd rather have lower premiums and a higher deductible because, knock on wood, I won't see the doctor very frequently, and so to me that's a lower cost. So there's always that balance of, are you a high user, are you a low user, and where are you going to see the biggest bang for your buck based on that design?
So then who's making up the employee side of it? If it's a committee or who makes up that side of it?
So we have members, we have an individual from public safety. So these are line employees, they're not necessarily department heads. So we'll have a line employee from public safety, public works, utilities, the administrative office. So it's just general employees of the village that come in. Tina and Sue from Brown & Brown, they come in, they give us the outlook for the year and what we anticipate to be our cost for providing the benefit to the employees, what that premium equivalent will be. And then we look at, okay, this is your premium equivalent. if we were to, we recognize due to cost of providing health care, our equivalent will need to go up X number of dollars or percentages next year to cover our costs. So, and part of the discussion too is we try to maintain a fund balance of 6 months of expenditure so that if there is a catastrophic loss, we have enough money in the bank account, if you will, to pay for those expenses. So we look at what that premium equivalent is, and then we look at, okay, if we want to reduce the overall burden of that increase to the equivalent, what will a change in deductible produce? What will a change in out-of-pocket produce? Where will that go down? Where will that go up? And then in addition to that, and you'll see that in the packet, we look at other comparables too. We look at the private sector, and we look at other public sector comparables, and we try to stay competitive with that. What we find is individuals are going to be paying for these increases regardless of how it's designed. It's a matter of, again, to that point of, if we don't increase the out-of-pocket deductible, we'll have to increase the premium to cover that expense. So again, it comes down to that balancing of act of who should pay for it, the users that are using it or the entire pool of employees that may or may not use it. Mm-hmm. So they try to find that balance of, well, I think that's the value of having a high deductible health savings account eligible plan, is that the users of the plan are the ones paying for it predominantly. And so you become a better consumer of your healthcare then if you're forced to pay for it.
Okay. Thank you.
As I understand it, so far this year, we spend about over $990,000. So for the employer cost, so it's about $2 million a year, right?
Correct. So
For
yeah,
our employee share.
Yeah, our employer share is roughly 95% of the overall premium equivalent. The employees pick up 5%. Now, the vast majority of our employees meet the health risk assessment component of that to receive that incentive. If they don't or refuse to participate, they have to pay an additional 2.5%. But yeah, roughly 95% of the overall cost is covered by the village.
So the premiums are not really set yet, are they? And the increase that you're going to have, like 140-some,000, is that set already, or is that just an estimate?
That currently is an estimate based on worst-case scenario stop-loss insurance. So that dollar amount could come down in the event we were able to negotiate a better stop-loss insurance.
Thank you.
So we, and to that point, we do budget. So we have these numbers. We budget worst-case scenario for 2026. Obviously, we're working on that budget. When those numbers get finalized, the budget gets updated and reflected on those updated numbers, and then that information will be available for sure by that November 11th meeting when we have that joint meeting between the committee and the board.
So Joel, you said with not having the number for stop loss right now, the numbers you have here are worst case scenario. So what you're saying then is you feel that stop loss will not be any higher than it is right now by saying worst case scenario.
That's
Because
what
that's what you're basing your numbers off right now?
correct. That's what we're being told by Brown and Brown as they negotiate. So we have what our existing stop loss carrier provides, so we know what that percentage is.
For
And
next
then
year
we're
already.
and then we're negotiating a better price off of that, so we should see an improvement from that. We just have to, there's some conditions to that, so you can negotiate a better premium cost for your stop loss, but you may end up making some subtle changes to the stop loss plan, meaning, and we're gonna get into the weeds a little bit, but whether you allow for what's called a laser. So you might have one really high cost claimant that you wanna laser in and put kind of focus on them, so then you're kind of capping the premium on that individual. There may be, so let's say $75,000 is our cap, so anything beyond that, stop loss kicks in. We might say, you know what, let's adjust that to $85,000. And we've done that. In fact, I think our cap right now is $85,000, not $75,000. We did that 2 years ago. So let's say we change it from $85,000 to $90,000. So what we do is we look at, okay, it's a risk assessment, right? So we know we're gonna have another $5,000 of increased cost by changing the cap to $90,000. And we know we'll have 5 to maybe 7 individuals that might hit that cap. So that's, let's say, $35,000 total in risk to the village, but our overall premium cost is less than 50,000, it's $50,000 less
Yep.
by making that change, we'll take the risk.
I mean, it looks like a good plan when you look at the deductibles you're proposing, and if the committee is okay with it, that's a big part of it, because they can help get the information out. And it really is a rich plan for the employees. I mean, they're getting a lot for their money, for their 5%. A 5% contribution is unheard of nowadays. Most employers, most private businesses, they can be up as high as 25% that the employees are putting into it. So I think the plan itself is really good, and the amount that they're contributing and having that option to go with the HSA or the health risk assessment to bring that premium even further is a good plan.
Is that a motion?
Sure, I will make a motion if you want. I don't know if you want this all separate, the medical and dental and,
No, it can be just a singular motion, that's fine.
okay. Are you gonna go through dental or no?
Essentially, dental is really kind of no change to the plan design. The only thing changing is a percent increase. We do have those numbers because stop loss is not affected by dental, so it's a 3% increase. And the idea behind that is for a number of years, we had 0% increases on the dental insurance because our fund had a pretty robust fund balance to that. And we really kind of whittled that down, that fund balance. And then we actually took some of that dental fund and I believe we transferred it to the health fund. Because our health fund, we were trying to build up to that 6-month reserve. And so that 3% increase on the dental is just to account for that, the fact that we kind of whittled that fund balance down. And now we want to kind of stabilize that fund for that purpose.
Can I ask a quick question about the clinic, or I should say the clinic, the health risk assessments? It looks like you're discontinuing those, and now, if I'm understanding it right, please clarify, that if they want to get that 2.5% decrease, they have to go for an annual exam and also blood draw and labs. And is that with our in-house, then nurses that they do that, or do they actually go to their regular doctor if they wanted to?
Yeah, a little bit of both. So what we used to do with the health risk assessment is we would bring in a group that would basically do blood draws, do lab work, produce results, and then kind of score out based on the results to the employee and their spouse a certain score. And if they scored under 70 points, then they had to have a follow-up conversation with the nurse practitioner that basically would kind of give them guidance as to how they can improve their health score. Maybe it's a smoking cessation program or some type of exercise routine or something to that effect. What we're effectively doing, because we were just having some challenges with getting the appropriate entities here to do the health risk assessment, we're going to what's called a wellness certificate. So what we found with the health risk assessment is you'd get your blood drawn, you'd get your score, but then we would still require an annual physical with your primary care provider. The primary care provider then oftentimes would require you to do a lab and then come in and have that same conversation with your care provider. So there was a lot of duplication and effort. And so what the wellness certificate does is it allows you to have that singular appointment with your primary care provider. You can have your labs drawn through your primary care provider. You can have your labs drawn here at the A+ clinic, and then the lab results get sent to your primary care provider. But either way, you're meeting with your doctor or your primary care provider to both sign off on your annual wellness and then also your wellness certificate. So it hopefully reduces the redundancy that came from the HRA and your primary care visit. And then, of course, our A+ clinic, on top of that, not only can they do your lab draws if you don't want to go see the lab at your primary care provider, but Marissa, our licensed nurse practitioner, can also do the annual physical as well. So if you want to just avoid that altogether, you can. All of this is preventative, so as part of a high deductible health plan, all of this is covered to the employee. So as long as they do it one time per year and not going in every month, they will have no direct cost to that because it's considered a preventative screening.
Thank you.
All right, there's no other discussion. I'll entertain a motion.
Okay, how about a motion to maintain the 2026 employee medical prescription premium contributions at 7.5%, including a 2.5% premium contribution reduction if the health plan participant completes the wellness requirements as directed.
Second.
All right, we have a motion by Tracy, seconded by Tom. All in favor, say aye.
Aye.
Aye, opposed? Motion carries. C, consider discuss act on 2026 commercial liability insurance program. Joel.
Yep, thank you, Chris. This is just a general update on commercial liability insurance program. So the village has for many, many years worked with the League of Wisconsin Municipal Mutual Insurance Company to provide liability and risk insurance to the village. This is in the form of general liability, law enforcement liability, premise medical payments, public officials liability, automobile medical payments, uninsured or underinsured motorist liability, crime and bond coverage. So bonds that are provided for our clerk, our treasurer, our municipal judge are all covered under a blanket bond. We do now have cyber liability protection in the event that we have a cyber attack or a cyber kind of hostage incident, if you will. And then they also provide workers' compensation insurance to the village. There are no significant changes to our program. Each year we review two critical components. One is cyber, so this is the one change we are proposing is to increase cyber liability coverage from $250,000 to $500,000. And that's just simply that we're seeing an uptick in the amount of attacks that local units of government are seeing from these cyber attackers, if you will, where they're kind of taking control of networks and then holding the municipality or that local unit of government hostage, if you will, and then requiring or demanding a certain payment to be made for release of that information. The other area that we tend to discover or discuss routinely is under the general liability program. We are not recommending any changes here, but there is the ability to add no-fault sewer backup coverage to your policy. And what that basically means is that if there is an incident that occurs due to a sewer backup, no fault, the insurance coverage will cover that at no question. The increase in premium, however, to do that is $75,000 per year. So it's pretty expensive. And the reason why we're not recommending it is it's a risk analysis. We have anywhere between 3 and 5 claims against the village for sewer backups, and not all of them result in an allowance or a claim to be dispersed. And unless that number increases to validate and make it worthwhile, if you will, that $75,000 premium, we're not recommending making that change. So I think at this point, we would recommend just, again, evaluating those sewer backups on a case-by-case basis. In the event allowance needs to be made, it is made, and we'll, again, evaluate it year over year. All told, the overall premium will decrease from last year by about $10,000. You'll see in that package, in that coverage checkup, that there are 2 main drivers to changes in that, and that is the commercial liability package is increasing because the statement of values was audited this last year. And just like everything else due to inflation, the value of property, of assets increase, so our premium is increasing for that purpose. And then the second one is a pretty substantial decrease in workers' compensation insurance. If you're familiar with that, that cost is based on an average over a period of time. We had some significant claims a number of years ago. Those claims have now rolled off because we've had a relatively healthy work environment, and so that modification factor that's used to determine the premium has decreased substantially for next year. All told, again, the overall decrease in the program package is about $10,000 to the village. Staff recommends continuation with the league. It certainly provides a significant value. I've included in the packet the services guidance so you can see the variety of services the league insurance provides to the village, and so we find a good deal of value with that.
If there's no questions, I'll entertain a motion.
I'll make a motion to recommend approval of the 2026 commercial liability package for LWMMI.
Second.
Okay, we have a motion by Tim, seconded by Kelly. All in favor, say aye.
Aye.
Opposed, motion carries. 7, items for next agenda. If anybody's got anything we want to see on the list here to talk about?
I'm sorry, do we have our next meeting, a cooperative one with the village board?
Yes, so thank you. Yes, so next meeting in November will be on Tuesday, November 11th. We will likely not have or need to have our regularly scheduled meeting on November 18th. On November 11th, we will meet at 5 PM to review the budget for 2026. And that budget, Greg is packaging and putting together, and I suspect it'll get distributed to committee and board on or shortly after November 5th. So that information will get sent out. So Tuesday, November 11th, 5 PM, it'll be a joint meeting between committee and board.
So November 5th, the packets will be available for that meeting, you said? Okay.
All right. That's it. I'll take a motion to adjourn.
So moved.
Second.
We have a motion and a second to adjourn. All in favor, say aye.
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 Opposed, we are adjourned.